Hi there, my name's Andrew Thompson. I live in Australia, and as such most of my trades are in the Australian market unless I'm trading the currencies. This is my first YouTube video or any video, so please forgive any stuttering, muttering or pregnant pauses. I will get better as my nervousness subsides. Even though I'm looking at a blank screen, no one's looking back at me, still makes you nervous. So basically I'm going to start off looking at our All Ordinaries Index in Australia. The whole basis of my trading revolves around balance in the markets. If I see a run of 100 points down, I'm looking for a turn point in 100 days or 100 degrees or 100 weeks. I need to see the same numbers repeating. And in this first little video, you will see that come out in very clear reality. This first chart is basically from the 2007 top, before we had the major bear run down to March of 2009. We did 3,821 points in less than a year, less than a year and a half, 494 days, to a low of 3,052. I need you to write these numbers down because the next couple of charts going over will show you how they predicted major turns in the future. From that low, we had a bull run of 2,018 points up in 763 days to the top was 5,070 in April 2011. So please write these numbers down. They're very strong numbers and they're going to give you very, very tradable points to look at in the future. I'm just going to stop at that at the moment and look at the date of the top, which is the 1st to 11th 07. Number one, I want to look at the year, 2007. It's the year ending in 7. Just as in 1997, where we had the Asian crisis and the big crash there. And we had 1987, we had the great crash back then, which was at that point the biggest bear run in 2 or 3 generations. In Australia, we had a crash on the 20th of October. And basis the SPY futures, which I used to trade heavily back in the 80s and early 90s. The low in the futures was the 11th of November 1987. Now the date in between that is exactly the 1st of the 11th 2007. So if you're long going into that market in October going into early November in a year ending in 07, one would have to be very, very careful or very, very quick on your feet. And judging by the horror stories you read in the press, very few people were quick on the feet. Most people believed what the experts told. The experts basically always talk their own book. If you don't do your own homework, then you cannot complain too loudly when you lose a lot of money. And a lot of people lost a lot, some lost everything. Best frankly made me very angry because I've been around trading 40 years, basically since I was a teenager. And I've seen all the charlatans, I've bought all the tip sheets, I've listened to all the brokers, and when I've listened to someone else, by and large, I've lost my money. When I've done my own homework, I've usually made money. I've made and lost a small fortune. I was semi-retired in my 30s. I then listened to someone who I made a big amount of money in the 1989 crash going short. But because I had no real knowledge to go behind it, a few months later, I was basically bankrupt. All my years of working, all my heart, my sweat and my tears was gone in a few months. So trust me, I know the pain that some people went through in 2007 because I've been there myself. And I'm trying to use this forum as a vehicle for people who want to be educated to move forward and look after themselves. So anyway, getting enough of the philosophy, getting back to the chart, we had a nasty run of 3,821 points in 494 days, less than a year and a half. Please write those numbers down. They're going to be very important going forward. We had a low 3,052 in March 09, which is a strong date in itself, but I won't go into that in this video. Then we had a bull run up, 2,018 points in 763 days. Once again, write those numbers down, please. Alrighty, we've moved on to the second chart. and we have some more numbers that have to be written down. This has gone a bit forward after that 5070 top, that bull run up at 2018 points from the GFC low. Now we're looking for the major low 6873 back in 07 to the 011 date, which is 1243 degrees top to top. Just to clarify degrees, there's 365 days in a year, right? 365 and a quarter days in a year, and it's 360 degrees in a circle, and a year is nothing more than a circle. You start in summer, you go around and come back in summer. So sometimes I swing between the two, depending how things square out. So between the two tops, 1242 degrees, and that's irrefutable. It's not Elliott wave, it can have another degree, it can have a ratio coming out, it's straight old numbers. I'm not a computer programmer, I've been in construction all my life. I didn't do too well at maths at high school, but I know how to count. And I basically use an old calculator that I've had since I was a teenager. Mum and Dad bought it years and years ago. It's ancient, it's falling apart, it's got 2 AAA batteries in it, no solar panels, and I count purely on that. I'm writing a book at the moment, a little seminar book type thing. Basically it's going to be called If You Can Count, You Can Trade. And my whole premise is if you can count to 100 and you know what to do, you can be the top 5% of traders in the world. Maybe not the billionaire traders, the millionaire traders, but your percentage on your return on your account will be some of the best going around year on year. And I just do everything by calculator. So anyway, we got 1242 great days top to top. And the previous top, which was a bit low, I think it was 5043, pretty well a year beforehand, was 883 degrees top to top. So we have a couple of numbers coming up here. And don't forget, we've got a 3821 range going into the low. So we hit our 1240 degrees top to top, and we went down 1241 points. Well, for the eagle-eyed amongst you, that's one number one, between 1242 and 1241. So the time between the two tops gave you the range into the low. And if you look at the low price, it's 3,829. That's the price of the low, which is 8 points away from the major bear range in points from the GFC top. So basically the range going into the 09 low has given you the price of the next major low going forward. The top to top time between two tops has given you the range into the low. This is getting pretty serious. So for the people who have got this written down in their charts, 3821, 1242, when it hits that low, they're ready. And as you can see by on the candlestick here, the long tail, we have a huge spike going up. So a lot of people were prepared for this, and a lot of people weren't. If you want to be prepared, you have to do the work. If you expect a computer program, a black box to do the work for you, you're going to be very, very disappointed. Now then, we have got the other two time frames going here. We've got 883 degrees top to top, and we've got 883 days low to low. There's balance, like I said before when I was looking at the first chart. All I need is balance, and that's all I'm looking for. So I have 3 different things telling me that this is a low of note. Top to top became price, top to top became points going into low. Major low from GFC top to low gave me the price of the low. The previous top before this bear run down was 883 degrees top to top, which was the exact time between the two lows. So please pause there, print out these 2 charts and have a look at them, because everything I do works on this, whether it's stocks, commodities, Forex, it works well in, all these different numbers, they work out, and I do not trade unless I see them repeat. That's enough for the first video. We'll carry on with this campaign of the Ords in the second video, and you'll see how these numbers have picked up the future turns in the market with great accuracy. Thanks for watching, and I'll see you soon.